Joining us now, Dan Dolev, the Mizuho Americas senior analyst who made the call on Coinbase in particular. I'm curious about it, Dan, because Bitcoin has actually held up a little bit better lately than some of the high growth tech stocks.
Yeah, thanks for having me again on the show.
Why did you make that call?
Well, the call is basically not on Bitcoin. The call today is actually on them going all in on NFT and spending hundreds of millions of dollars on NFTs right when NFTs was at the peak. And if you look at NFTs today versus, say, 3 months ago, the hype around NFT has come down. This was maybe a one-trick pony that was very, very strong in January, February. That's when they made the investment. They're spending $4 to $5 billion on technology and G&A this year. Big part of it is going to be on employee. They're hiring 6,000 employees, and they're going all into NFTs. And I think this is, just kind of a Me Too action. They don't have a huge competitive advantage in NFTs, and the hype around NFTs is going away. So I think it's a mistake. And remember, if they go towards the low end of their MTUs or their monthly actives this year, they're not going to be profitable. They're going to be losing $500 million on an adjusted EBITDA basis. So it's the wrong time to make this bet, in my view.
But what about their core business and the scale and sort of first mover advantage that they've built there? What's that worth?
I agree. So they have an enormous first mover advantage, and they're actually gaining share in Bitcoin. If you look at sort of their share of Bitcoin, while it's very small, it's about 2% on a global basis, they're gaining share. But if you think about kind of the moat of this business, if you look at institutional take rates, institutional yields, what institutions pay to trade Bitcoin, that's about 2 to 3 basis points, right? It's very, very small. Consumers pay over 100. So I think what you'll see at the end of days is that consumer yields are going to, the spreads are going to shrink, and they're going to be in line with the institutional yield. So I expect a convergence and pressure on their revenues over time. So I don't like their business model. I don't think it's sustainable over a long period of time.
All the fintechs are under pressure today. You had that Black Cash App investigation, a former employee downloading customer information, but clearly the group has been hit hard. There are concerns about a consumer slowdown. Which valuation do you think has gotten the cheapest in the group?
I still like Square the most. I mean, especially on a day like today where they've had that security breach, which I don't think is going to be remembered, in a week or 2 weeks. The fundamental, the work that we've done here shows you that the Cash App could be 20% above where consensus estimates are today. People completely don't understand what they're going to do with Afterpay and Cash App and the seller business, the point of sale, combining the trio and creating their own ecosystem. So I think Square is, light years above and beyond everyone else in the ecosystem. That's the one I'm most bullish on, and that's the one I see actually working, especially as we near the Analyst Day on May 18th. So I view this as a huge catalyst. I would buy more Square today. Or Block. Square,
which is actually Block, which is down 6% and down about 15% for the year. Dan, thank you. Dan Dolev.